Here is a summary of Union Pacific's 2026 second quarter earnings call, designed for reading aloud. Introduction. Good morning, everyone. Today, we'll be reviewing Union Pacific's strong second quarter 2026 financial results. Leading the call are CEO Jim Vena and CFO Jennifer Hamann, joined by Executive Vice Presidents Kenny Rocker and Eric Geringer. Key financial highlights. Union Pacific reported a record second quarter, driven by robust execution and 2% volume growth. Revenue. Total operating revenue surged 12% year-over-year to $6.9 billion. Freight revenue also saw a significant 12% increase, reaching $6.5 billion. This growth was fueled by a 2.25% contribution from volume growth, a substantial 7.5% from fuel surcharge revenue, reflecting higher fuel prices, and a solid 1.75% from core pricing and favorable business mix. Other revenue grew 11% to $346 million, primarily due to increased subsidiary and accessorial revenue. Profitability. Net income reached a record $2 billion, with adjusted earnings per share of $3.41. While total operating expenses rose 13% to $4.1 billion, largely due to higher diesel fuel prices, the company achieved solid core improvement. Operating ratio. The operating ratio improved by approximately 10 basis points, coming in at 59.2%. Cash flow and balance sheet. Cash from operations increased 21% to $5.5 billion. Free cash flow was $1.8 billion, after network investments and shareholder returns. The company also paid down $1.5 billion in long-term debt in the first half of the year, resulting in an adjusted debt-to-EBITDA ratio of 2.5x. Segment performance. Bulk revenue grew 7%, despite a 1% volume decline. Grain and grain products experienced double-digit volume growth, achieving record performance due to strong export demand and growth in renewable fuels. Coal, however, faced challenges from lower natural gas prices and milder weather. Industrial revenue was up 8% with a 3% volume increase, driven by strong core pricing. Petrochemicals and metals and minerals showed growth, though the export soda ash market remained weak. Premium revenue rose 21% on a 4% volume increase. Domestic intermodal achieved its fourth consecutive record quarter for both volume and revenue, benefiting from constrained truck capacity and shared gains. International intermodal saw a 14% volume decline, but showed improvement towards the end of the quarter. Automotive. Positive results were achieved despite market softness, thanks to strong business development. Management's outlook and forecasts. Union Pacific is raising its full-year 2026 outlook, EPS growth. The company now expects reported EPS growth in the high single-digit range for the full year. Operating ratio. Continued operating ratio improvement is anticipated, maintaining industry leadership. Future quarters. Management expressed confidence in continuing to efficiently move increased volumes. Grain and grain products are poised for second-half growth. Coal is expected to remain challenging in the second half. Industrial demand is expected to remain strong, with continued strength in petrochemicals and metals. Domestic intermodal is projected to perform very well, and international intermodal is expected to turn positive in the second half. Significant risk factors. Fuel price volatility. Fuel prices remain volatile, with recent purchases exceeding $4 per gallon, posing a significant margin pressure. Coal market challenges. Elevated coal inventories and lower natural gas prices present ongoing challenges for the coal segment. Economic conditions. While industrial demand is showing strength, the broader housing market remains soft. Merger approval process. The ongoing merger review with Norfolk Southern is a significant process with regulatory scrutiny. Highlights. Record financial results. The quarter marked record net income, EPS, and operating performance. Strong volume growth, 2% overall volume growth, with significant gains in domestic intermodal. Operational excellence, record workforce productivity, train length, and fuel consumption efficiency. Exceptional service metrics were maintained, with freight car velocity increasing 5%. Merger milestones. The Surface Transportation Board accepted the merger application as complete, and supplemental information was filed. Canadian National Agreement. A merger settlement agreement with Canadian National was reached, addressing ownership concerns and providing new route options. Pricing power. Core pricing continues to exceed inflation, reflecting the value of Union Pacific service. Industrial development. The industrial development pipeline remains strong, with new customer wins and plant expansions. Lowlights: coal volume decline, weaker natural gas prices, mild weather, and customer downtime impacted coal volumes. International intermodal decline. Volume was down 14% year-over-year, although showing signs of recovery. Compensation costs. Compensation per employee is expected to increase around 6% for the full year, driven by wage inflation and higher health and welfare costs. Most important statements from CEO Jim Vena on the quarter. We had a very strong second quarter as volumes, pricing, and operational efficiency drove record financial results. The network continues to be very fluid, and our buffer of resources is supporting broad-based growth. On future outlook. Looking ahead, we are prepared to meet increased customer demand with best-in-class safety, service, and operational excellence. For our 2026 outlook, we are raising to full-year reported EPS growth in the high single-digit range. On the Norfolk Southern merger. This merger will close. It's too compelling for the country not to close. The transaction is an end-to-end solution that reduces costs for customers and increases competitiveness versus trucks. On the CN agreement. Our merger is unprecedented and deserves a careful review. We've done our homework. Since we first announced our plans to merge, we have even more conviction that our transaction is in the public interest and will deliver benefits for our stakeholders, especially our customers. Most important statements from CFO Jennifer Hamann on revenue drivers. Importantly, our quarterly pricing dollars continue to exceed inflation dollars as we compete and win business at levels that reflect the value of our rail service. On expense management. Although we're confident we'll continue that productivity trend, we now expect full-year compensation per employee to increase around 6%. On the outlook. Overall, a strong first half of 2026, coupled with an improved outlook, highlights our ability to grow volumes, deliver for customers, and manage costs, a strategy that delivers value for all of our stakeholders. On EPS guidance. Jonathan, it's a number of different things. Kenny's business performance and outlook are stronger than we thought coming into the year, which is great news and makes us feel bullish. Eric and his team are handling increased volume efficiently, in a cost-efficient manner, and giving a strong service product to support customers as they grow. It's all of those things combined. This concludes our summary of Union Pacific's 2026 second quarter earnings call.